Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 11th, 2025, we're dissecting the recent movements of XAUUSD, or spot gold, which has been making significant headlines. Recent news suggests gold has surged past inflation-adjusted records, highlighting its enduring appeal as a safe haven asset amidst global uncertainties. This strong performance is largely attributed to persistent trade-related uncertainties, such as U.S. President Trump's proposed tariffs on China and India, and rising geopolitical tensions like the situation between Poland and Russia. These factors collectively boost gold's safe haven appeal, acting as a crucial floor for its price. However, we're also seeing reports of gold experiencing modest bearish pressure today, retreating to approximately $3,620 amid a strengthening U.S. dollar. This comes despite a sharp increase in U.S. jobless claims, which typically weakens the dollar, and slightly higher than expected August CPI data, which suggests inflation remains a concern. A key driver for gold in the midterm is the market's expectation that the U.S. Federal Reserve will lower borrowing costs next week. Analysts predict 325 basis point rate cuts by year-end, with a small possibility of a jumbo cut on September 17th. Lower interest rates generally support gold, as it's a non-yielding asset, making it more attractive when the opportunity cost of holding it decreases. Conversely, record highs in major equity markets like the S&P 500 and Nasdaq are seen as denting demand for traditional safe havens like gold. This dynamic creates a tug-of-war for XAUUSD, with fundamental forces pulling in different directions. Now, let's turn our attention to the charts to see how these events are reflected in price action. On the daily chart, looking back over the past few months, we can clearly observe a significant bullish trend for XAUUSD. Notice the consistent upward momentum that began around May 2025, pushing prices steadily higher. This long-term trend, characterized by higher highs and higher lows, confirms the news reports of gold's record-breaking rally. The overall volume has also picked up significantly in recent months, especially during strong upward movements, indicating robust institutional and retail interest. This visual representation of sustained buying pressure highlights the market's confidence in gold's safe haven status over the medium term. Zooming into the recent price action on the daily chart, specifically from late August through early September 2025, we can pinpoint the strong surge. Gold pushed through previous resistance levels with conviction, notably breaching the $3,500 mark and continuing its ascent. The candles from August 26th to September 9th show consecutive days of strong closes, culminating in a high of $3,674.07 on September 9th. This high aligns almost perfectly with the all-time peak at $3,675 mentioned in our news summary from FX Street, confirming a monumental achievement for gold. We can see that the market tested this peak and experienced some rejection on September 9th, with the candle closing slightly below its high. The following day, September 10th, shows a relatively smaller body candle, indicating some indecision after the strong rally, with a close around $3,644.77. This area of $3,660 to $3,670 appears to be a crucial short-term resistance, as indicated by the failure to sustain acceptance above it, as the news report stated for the current day. Now, shifting to the 15-minute chart for a closer look at the immediate price behavior leading up to the current news. This time frame shows the volatility and short-term trends that precede today's reported drop. We observe prices moving generally sideways to slightly down on September 10th, following the peak on the 9th. The latest 15-minute candle for September 10th, at 23:55 Universal Time Coordinated, shows a close of $3,644.77. It's important to note that the news of gold retreating to $3,620 today, September 11th, is a very recent development that would occur after the data provided in this specific chart. However, the preceding price action on this 15-minute chart does show increasing bearish pressure and failed attempts to reclaim higher levels, which could foreshadow such a retreat. The lack of strong upward pushes, despite some attempts, suggests that bullish momentum was waning even before today's reported drop. Looking at the 1-hour chart, although the data here only extends up to late August 2025, it still offers valuable insights into intermediate market structure. We can see how price has historically reacted to specific zones, forming patterns of support and resistance. For instance, around the $3,370 to $3,380 range, price found some strong support and resistance points throughout this period. Observing these previous reactions can help us understand the psychology of traders at similar price levels should current price action retrace to these areas. While this specific chart doesn't capture the recent record highs, it reminds us of the importance of historical price memory in identifying potential turning points. A clear upward trend is evident in this time frame as well, echoing the larger daily chart's bullish sentiment. Let's consolidate our findings and discuss the implications for future trading decisions. The key price levels to watch in the short term are the immediate support at $3,620, which gold is currently testing, followed by the psychological $3,600 round figure. A confirmed breach below 3,620 could open the door to further declines towards the weekly trough of $3,580 and potentially the September 4th low of $3,510. On the upside, immediate resistance lies around the Asian session top of $3,649 and the overnight swing highs of $3,657 to $3,658. To resume its bullish run, gold needs to sustain acceptance above the $3,660 to $3,670 area and challenge the all-time peak at $3,675. A decisive break above $3,675 could pave the way for a move towards $3,700, which would act as a strong near-term barrier. For the short term, the market appears poised for a healthy correction after its significant rally. Reasons to be bearish in the very short term include the strong US dollar appreciation and robust equity markets, which reduce gold's appeal. However, long-term bullish sentiment remains strong due to expectations of Fed rate cuts by year-end and ongoing geopolitical tensions. A bullish scenario for 2025 could see gold push towards 2,900, then 3,000 to 3,020, and even $3,130 if global policy easing continues or conflicts escalate. Conversely, a bearish scenario for 2025 might unfold if geopolitical tensions ease, inflation persists, leading to a hawkish Fed, or US-China trade tensions hurt China's gold demand, potentially pushing prices to 2,530 to 2,500, 2,400, or even $2,300. Traders should closely monitor the upcoming U.S. Consumer Price Index data today at 12:30 Greenwich Mean Time and the Federal Reserve's interest rate decision next week. These economic events are highly likely to cause significant volatility and dictate gold's short-term trajectory. Keep an eye on the inverse correlation with the U.S. dollar. A weakening dollar, possibly from Fed easing, would reinforce gold's likelihood of moving higher. Conversely, if the dollar gains strength unexpectedly, gold could face increased pressure. Remember, diversification and risk management are paramount, especially in a market driven by such diverse and powerful fundamental factors. Thank you for watching Explain the Charts. Don't forget to like, share, and subscribe for more in-depth market analysis.